Welcome to our webinar, How to Manage Your Cash Flow During a Crisis, Part 2. This one is on break-even. So today I want to do a slight recap. First on the help that's available to small business, but also to see if you have got any questions following from the cash flow projections webinar last week. Hopefully you'll have all had a chance to slot your own figures on, but if you've got any difficulty with any aspects of it when you try to do it yourself, please type them in the chat box or contact me later. Jerry is monitoring that for me. He's looking after the IT, etc. So he'll let me know when a question comes through. I also want to talk about the profit equation and your break-even figure and why it will be important, well, why it is important now and once we're through the other side of this crisis, hopefully. So we'll start off with a quick reminder on the government HMRC initiatives that are available. We went through this in a bit more detail last week, so I'm not going to spend too much time on it. We have the VAT, corporation and income tax deferment. The VAT, you cannot defer anymore from now, but though that amount that you did defer is not due until the 31st of March 2021. The income tax deferment, the amount that you should have paid on the 31st of July, doesn't have to be paid now till the 31st of January 2021. There's also the business interruption loans for larger businesses, the bounce back loans, which, as I said last week, need serious consideration because of the advantages that they bring. There's the furloughing of staff, which is being reduced from October from 80% to 60%. There's the self-employed income support scheme, and there's a few other business support initiatives. Now, hopefully you're all well aware of those. If there's anything on that list that you're not sure about, please drop me a line or type it in the chat box, and we'll talk to you about it later.
Sorry, Ravi, just a second. Your voice is going up and down a little bit, so if you just get a little bit closer to the microphone for people, that'll be a little bit better. Thank you very much.
Right, sorry.
Cheers. Thank you.
So moving on to the profit equation. It's a good idea to start with this and also moving on to the break-even figure. Now, it's easy to think of your business finances as more complicated than they are, but when you understand the basics, they're really not that complicated. So what is the profit equation? It's nothing more difficult than profit equals income less expenditure. So when you look at your profit, you can't change that figure in isolation because it's a product of your income and expenditure. So you can change the elements that make up the profit, i.e. you can do something about your income or you can do something about your expenditure. Asking for payment holidays is not the same as cutting expenses. For instance, if you're asking your landlord for a 3-month rent holiday that you don't have to pay for, you've still incurred the rent. They'll still expect his payment for the rent, but you've saved it in terms of your cash flow. So therefore it affects your cash, but not your profit. Okay. So let's look at the break-even figure and just a few ways to look at reducing your expenditure and increase your income in the time that we've got. We'll be covering a lot more in a lot more detail in coming webinars, so please do watch out for our emails. We're going to have a Q&A session at the end, so if you've got anything that comes up, type them in the chat box. Jerry will be keeping an eye on them. But before we start, I just want to refer to our next webinar, which is going to be next week on goal setting. I'll show you how to do your goal setting quickly using our 24-hour goal setting tool, and I'll demonstrate that in the next webinar, which you'll get for free, and obviously chances to ask any questions you like. We'll be booking attendees on today, and we'll confirm everything in an email. But if you can't make it, don't worry, as it will be recorded and available on our Business Hub. Referring to the Business Hub, we mentioned this last week. So what we want is for you to start planning for the future. And we're supplying tools, tips, webinar recordings to help you look after your cash flow as we come out of this crisis, and hopefully come out of this crisis. There'll be mini mentoring sessions over the coming months, troubleshooting problems or issues or challenges that you have. We'll be providing answers to any questions. There'll be brainstorming ideas. We'll be going through troubleshooting issues, and we'll then be providing considered opinion from our panel. So if you're interested, join other business owners, and we can get involved in special sessions and mini mentoring sessions. So if you're interested, type yes in the chat box for any time from now until the end of the call. Or you can email me on info@Wren Accountancy, just put Business Hub in the subject line. Also, if you know anyone else who may benefit from the resources, please do pass on our details. We're more than happy to share this with others. It's free, because it's all about helping businesses through these times, as it's going to benefit us all in the long run. If you do need a chat now, if you've got pressing issues, send an email either to book in a call, or I'll put my mobile number there because I'm working from home most of the time under the current circumstances. So there's my mobile. If you want to have a chat, sooner rather than later. Right, break-even analysis. I'll run through this so you get to know how to do it for yourself. And I'm going to give you the template that I'm using today, but it's macro, so I do need your email address, and I'll be in touch straight after with the macro template that's been developed with our Association of Accountants. Again, if you know anyone else who is not a client but would like it, please ask them to join our Business Hub, and we'll get it sent out to them. Okay, just bear with me while I just bring up the break-even spreadsheet. There we are. So this focuses on two sectors: services and retail. So choose whichever is most applicable to your business. I'll start off on the service sector. Click start, enter your company details. Now we've got chargeable weeks and chargeable hours. Obviously a normal year has 52 weeks. Assuming that you've got your normal holiday year, holidays, statutory holidays, maybe allow a bit of sickness. So instead of being 52 weeks, you probably need to slot in 46 weeks as an example. If you have a 40-hour or 37.5-hour working week, you're not physically going to be able to spend all of that time on chargeable work. You'll have various administrative tasks. You may be supervising, you may be doing research, doing training, whatever it is. So you may set a budget of, realistically, say 30 chargeable hours a week. Click on next. This brings you to your input form. And again, you just go through slotting in the figures as are applicable to you. You've got required income. So your required income, obviously that's your personal choice. An estimate of the tax that you'll need to cover. And you start slotting in your overheads. Now, you could get this from your last year's accounts. And if you've got your last year's accounts, tweak it for what you know the changes are for this year. For instance, advertising, if you know you're going to spend £2,000 on an advertising campaign to kickstart your business coming out of this COVID period, you'll need to adjust that figure appropriately. Okay, so last year's accounts, if it's a new business, hopefully you'll have done a business plan or some kind of forecasts, slot those figures in and use your best judgment and knowledge. You've got staff salaries or admin salaries. What I should mention is this is unfortunately built for one fee earner. So if you're the owner worker in the business, that's built for you. It can be used for your individual staff, but you've got to tailor it and split some of the costs in between your staff. I haven't got time to go into details on that now, but if you need any help, please get in touch. So yes, you've got your input of all your costs. Click on next, and that summarizes things for you. You've got your required level of income, an analysis of all your overheads and costs. So you've got your total overheads plus your required income gives your required level of fees. That there gives you a breakdown as to what you then require per month. Now that's your goal, that's your target that you need to make sure that you're hitting. If you're charging billing more than that per month, all is good. If you're not hitting that figure, then it's giving you a signal that you need to look at sorting things out, looking at ways to either increase your turnover or maybe reduce costs. From there, it's calculated your required level of fees, and then it's divided by the number of chargeable hours. Now, going back to the hours tab, that is a multiple of chargeable weeks times chargeable hours. So you've got the fees that you need divided by chargeable hours, which gives you a base of £76 for your charge out rate. So you now know that you've got to set your charge out rate at £77-ish to generate enough income to give you the income that you require and cover costs. Okay, so if we go back to the start and select retailer, click start. Let's assume at the start a gross profit margin of 50%. So a gross profit margin of 50% is if you buy something for £50, you'll sell it for £100. Again, similar as before, you slot your figures in, your overheads, wages that you've got. And drawings, that's the level of income that you require, and the estimated tax that you'll have to pay. Hopefully that's all self-explanatory. Click on next, and again it summarizes. It gives you a total level of income required of 138,500. So your costs are 138,500. You've got a profit margin of 50%, and that gives you a required turnover of £277,000, or £23,000 a month, or 5,000 a week. Again, they're the goals. That's what you need to achieve. Now we use this with clients. If we click back and we say, right, what would happen if you increased your gross profit margin? So you put your price up a bit. And that would bring your required turnover down from 277,000 to 250,000. So just by increasing your price, then it reduces your turnover target, which may make it easier for you to achieve. Now, conversely, you may know people who try and cut their prices with the hope that they're going to increase their turnover. What we find is it very rarely works. If you slash your price at 45%, it takes your required income from 277,000 to 307,000. That's an increase of over 10%. So it makes it more difficult to achieve your targets rather than helping you. So that's all in all your break-even analysis. Hope that's been easy enough to understand.